For latest updates, subscribe to our channel and press the bell icon.
RMS. RMS for examination, RMS for assessment, RMS for both assessment and document processing. What is RMS? RMS is risk management system. What is a risk management system? We all as individuals have a lot of risks, and we all have a process of managing those risks. So what are our individual risks? Our individual risk may be that we could fall ill, we could meet with an accident, our house could get robbed. There are so many things that can happen to us. So what do we do for all of them? We cover a mediclaim to cover an eventuality where we may fall ill. We cover an accident insurance policy. We cover a home policy. We have so many ways in which we recognize our risks and we manage each of them. So what we have already done is that we have created a system for each of us to manage our risks. Now the RMS, as you and I understand it, is risk management system of customs. So we need to understand what would be the risks of customs and what has customs done to manage the same, and what is this that they are talking about, which means that it is a risk management system. We all know that every import and export consignment which comes into the country or goes out of the country goes through what we like to call 4 different regulators. The 4 regulators would be the DGFT, Director General of Foreign Trade, who decides whether an item can be exported or cannot be exported, and if it can be exported or imported, what would be the conditions, or there would be no conditions attached to it. They also issue what is known as the IEC number, which is an identifying number available in India to exporters and importers. This number only gives them a registration which helps them export or import. It also helps the department to identify them. It helps the service providers to do their KYC. It helps in controlling any future actions that an IEC holder may want to take. The second regulator is the Reserve Bank of India, who in a very simple manner controls that if goods went out of the country, did the remittance come in? And if a remittance went out of the country, did the goods come in? Attached to that, they have certain conditions, they have time limits, and the entire process of the Reserve Bank of India is done by what we call authorized dealers or banks in normal terminology. And that is why we have what is known as the AD code, which is to be mentioned in every transaction that we want to do with Indian customs. The third regulator would be the participating government agency. India is very conscious of what goes out of the country. It's brand India, and they have to be very conscious about anything that is being exported from the country. Similarly, anything that is imported into the country ceases to be imported goods once custom clearance is given. Even the definition of imported goods clarifies this position very clearly. So once the goods are cleared for home consumption, they are at par with Indian goods and should be treated as Indian goods. Now, if a good manufactured in India has certain special conditions attached to it by the various different government agencies, then by that same standard, every consignment coming into the country should be treated identically. Every consignment going out of the country should have met with all the requirements. And the last regulator would of course be Indian customs. The single item which links all of them are the HSN, very importantly what we call as the customs tariff heading, along with the IEC and the AD code. Once a document has the HSN or the CTH, it has the IEC code and it has the AD code, all the regulators are linked and they are covered. Indian Customs, through a massive study, historical and concurrent, have realized that there are certain HSNs which require stringent checking. There are certain HSNs which require maybe a medium checking, and some HSNs where the probability of something going wrong is very less. So a system was designed whereby the computer has been configured to recognize HSNs which the government of India consider as risky, IEC numbers which they consider as risky. So whenever you have an CTH or an IEC which customs believes can be risky, those documents are not facilitated. And whenever there's an HSN or a CTH and an IEC which the government feels can be trusted, those documents are facilitated. And that is what we see when we see on our screen RMS for assessment. It is not to be assessed, and the declaration of the exporter or the importer is to be accepted. RMS for examination would mean that it is not going to be examined, and the declaration of the importer or the exporter is to be trusted. So RMS, in a very simple manner, is just a system created by Indian Customs to manage their risks of assessment, their risks of the regulators whom they are responsible for, and wherever they feel that the chances of something going wrong are less, they would facilitate those documents, and wherever they feel that the chances of something going wrong are high, they would not facilitate those documents and insist on verification, examination prior to giving an out of charge from customs, either on import cycle or export cycle.
For detailed learning of all logistics subjects, visit www.logivator.com.